What's up, everybody? Welcome back to Wealth Not Wait. I am your host, as always, Joseph Coizza, and on this episode of Financial Friday, we are talking about investing versus trading. So before we get into it, I want to make sure you guys like, comment, and subscribe, though. If I have value to your day, your week, your month, your year, your life, whatever, be sure to let me know, and I'm going to keep doing it. So if I have value, be sure to hit that like button and subscribe, and then I'm going to keep bringing you this awesome and valuable content. So the difference between investing versus trading, and what something that brought this about was I'm watching a lot of r/Wall Street Bets videos and just watching all these crazy dudes go out on things like Robinhood and the trade platforms and taking advantage of these huge exploits, like the one guy who had the Robinhood exploit a while ago, Control the Narrative, and making these $1 million bets by putting in just like 10 grand or something like that, and just completely getting fucking steamrolled by the market because they go out on these wild limbs and then just get fucking shut down. So somebody who trades actively and goes high, low with the market and continues and do all that, the typical what you would think stock trader is someone who is a trader. It's just that stock trader, therefore trader. And that's on gold, that's on bonds, it can be whatever you could be trading. But when you're in the market and you go, okay, I'm going to buy at the low, sell at the high, buy at the low, sell at the high, and you continue going up and down those points. You know, a lot of people don't sell things they do for day trading. They don't keep investments longer than a day. If you keep your investment longer than a day, then you're fucked up. And I use the word investment loosely. I really shouldn't use it at all, to be honest, which is kind of a mistake on my part. But if you use that purchase for only a day, you're a day trader. You know, if you go past a day, then you're a good day trader because, you know, it's within the day, again, in the name. But somebody who invests, buys something for a long time, they make an investment, they put in how much money they're putting in, and hopefully you get a reasonable sum and or hopefully an extremely large sum, you know, later on in the future. You know, it's like Warren Buffett said, you know, a bird in the hand is worth two in the bush. Maybe you may not understand what that means, but it basically means, you know, you say you had a bird in your hand, you're willing to give up that bird in your hand to get two in the bush. Now, you don't know when that bush is going to give you two birds. You kind of hope there's two birds in that bush. It could be 10 birds. It could be, you know, 30 birds. It could be one bird. Who knows? It could be no birds. You know, that bush can sprout out birds, you know, after you're dead, before you're dead, who knows? But the goal is to find a reasonable investment and go with that whole bush scenario. Give your bird your capital in order to into the stock market, the bush, and to get, you know, two birds later, hopefully, you know, double your investment, triple your investment, how much at a reasonable time. Day traders and all these people don't do that. Well, people who are like r/Wall Street Bets, they'll go out on these crazy, insane, you know, trading limits and there's insane, unrealistic goals, and they're not representative of traders as a whole, but it's a good kind of way to break into it. And I've been watching a lot of these videos, just watching all these dudes go crazy about it and make these trades, and some of them do very well with money and some of them don't. But the reason why I'm not a trader and what I really want to get into it is because traders, like I said, are very short-minded in their approach. They're not worried about what the stock is going to do next year. They're not worried about what it's going to do 10 years from now. They're worried about what the stock, that gold price, that bond, whatever they're buying is going to do right now, maybe within the next few weeks, maybe months tops, as I would say. I don't even think year would be the good way to do it. Days, hours, minutes, seconds, those are more like along the lines of it. You know, again, maybe weeks, maybe months. You know, short-term way of thinking. It's not a very long-term way of thinking like I progress. And I learned that by doing that, it's very easy to lose money. It's very easy to not get the most out of your capital. People who do that historically, I mean, there's some people who, you know, beat the market and they're, you know, millionaire, billionaires from doing it. But most people who do that open themselves up to an excruciating large amount of risk and then don't make it. They just get fucking steamrolled. Not saying it's not like a dream where it's just like, even though, you know, most people don't make it, you gotta try because it's your dream. It's just when you're playing games with your money, that's what you're doing. You're opening it more like a gambling. People say, oh, the stock market's gambling. Yes, you're gambling in a way, but you're mitigating your risk. You're saying, I've reviewed the numbers. This is what this business is worth. Here's how much it is. Okay, financially, here's what it is based on historical statistics. You're adding in all these factors. You know, it's like almost kind of like counting cards. You get more information. That's why it's illegal. You're getting more information. You know, on something like roulette or blackjack, you take the ball. Yeah, you could add mathematics to it and maybe work out something like that if you're, you know, a super genius or with physics or you have all that information, that variables ahead of time. But it's just luck. Okay, what's going to happen? You know, it could go up, it could go down. Who knows? You know, it could hit black, it could hit red. I don't know. And then that's what trading is almost like gambling. You're saying, okay, it's going to go up, it's going to go down. Maybe you have data to support it. Maybe you have data to do that. But the day-to-day, the week-to-week kind of statistics are very susceptible to people's opinions and people's thoughts. Part of the market is what you're willing to pay for it. And while, yes, there is that underlying value, it goes up and down based on what people are willing to pay for it. Over the long term, the numbers game wins. But over the short term, it's just people's emotions. So you could say the numbers are going to tell me this is going to go up today. But then, well, guess what? People maybe woke up and majority of people trading, they didn't get a good night's sleep, or, maybe the fucking coffee shop on Wall Street got closed. So people are in a bad mood today, and then guess what? Fucking, prices are down. I mean, it's something that simple. Maybe it's raining today. Price is down. You check the weather forecast. Oh, it's great. Everything's going to be good. And then it rains in fucking New York. It rains on Wall Street, and everybody's kind of like in a gloomy mood today. Or maybe, fucking the power got cut on one of the buildings a block away. Oh my God, New York's losing power. Everybody, fucking trade everything. That's essentially what they do. And those effects, you aren't really applying real logistics and real, like, a skill to it. You're just saying, here's a shot in the dark. All this information I have tells me this. I kind of hope this is what it should do. Will it? Maybe, maybe not. And there's some people who are good at judging that kind of thing. There's some people not, but you can't consistently and concisely bet and say, yes, the market will do this today. Yes, the market will do that today. It'll go up, it'll go down. You can't do that, and that's why trading is so dangerous. And you get sort of stuck in this gambling loop. And it's just not a good way to use your money. I mean, could you come out on top? Yes. Could you get lucky? Yes. Could you sit there and spend years upon years upon years learning everything and becoming a super expert and probably do kind of well in it? Yeah, maybe. But there's no concise way to do it. There's no concise way to build wealth. There's no concise way to get your investments up. You're just throwing money at it and saying, here's some sort of kind of logic. Maybe it won't work. Who knows? With investment, it's like you're applying logic to it, you're applying time, and you go, yes, over the long run, if you look at the S&P 500, it is going to make you money if you invest in it right now. By the time you retire, depending again how old you are, but if I invest that and I'm 30, by the time I'm 65, that will make me money. And there's a strong chance, as history shows, despite all the highs and lows, it will be the best place to put my money in a general investment. Of course you could put it into a local business, and that business could turn out 10, 20 times the profit that, the stock market will. But as far as general investments that everybody can invest into with reasonable amounts of money, that is it. Gold, yeah, it's most likely going to go up in 30 years and it's be worth more than you paid for it. But as it shows, if you go back, the stock market still beats it out, even by at least a little bit. The stock market, usually the index funds beat it out. Same thing with bonds. Bonds is a guaranteed investment. There's a very strong chance, the government is going to pay you back. Unless the U.S. government collapses and can't pay back its debts, then you're going to get your money back. But again, it's only like 1-2% right now. It's not a great investment in the stock market. There's no guarantee you're opening yourself up to more risk, but there's a strong chance that that's going to happen based on data and history and what it shows us. Same thing with, Bitcoin. Oh, Bitcoin is going to be great. It's based solely on what people are willing to pay for it. It's like a stock market, except there's no underlying business. It's just what people are willing to pay for it. And then that's where I run into issues with that. It gets more to like trading, but on a long-term scale. You're just throwing numbers out and be like, maybe it'll be worth money, maybe it won't. As quickly as it came onto the scene, it can go, all these cryptocurrencies. The next one could blow up and then Bitcoin could shoot down to the bottom. Or a big cryptocurrency, so you can invest in Dogecoin. Put money, again, not invest, but put money into Dogecoin and maybe it'll do well, maybe it won't. Who knows? That's why I like investing. Investing is a long-term, goal-oriented sort of mindset, investing in a strong position into an index fund, into a stock, into something you're investing long-term, using factual numbers and using good historical data to predict, not exactly, but kind of get a reasonable idea. You're just making a reasonable assumption based on the data I have, based on everything that's done. Here's most likely what's going to happen, and then put money towards that. That's what an investment is. Trading is just, it's going to be higher or lower. It's going to be higher, it's going to be lower. Okay, I'm going to bet saying it's lower. I'm going to bet saying it's higher. I do it very quickly, and I'll make money, maybe I won't. It's future Joey, future from this video. But I'm cutting in to say that this is a very basic look at trading. There's very different ways of trading. You can do stock trading, and it's over a little, maybe a longer term, and it does take in numbers and logistics into it. But overall, the trading idea is that it's done very quickly. In the grand scheme of things, not saying second by second, but it's done very quickly. And it's done, yes, with information and logic, but not to the same scale as investment is. Investment, you can go back and look 20 years, with day trading and just trading in general, even if you're not day trading, just general trading, it doesn't do that on that long of a scale. You could kind of go back and maybe look and be like, oh, well, here's what this does. Around this time of year, this is kind of what it does, and put in the information and time into it, but you're not going back and reading 20 years of annual reports. You're not going back and looking at proxy statements. You're not voting in the company's history. You're not looking at the managers and going back and examining the businesses that they went through, and then here's how this does. Most traders don't do that. Some of them do, and some of them apply that logic and logistics, and maybe they'll do well, maybe they don't. But most traders, in order to do what you would consider trading effectively, they look at information and logic, but they don't look at the same long-term and same scale as your traditional investor would, as we would look for investing in an index fund or a stock long-term. Doing all that and looking at prospectuses and examining it and just kind of going through and getting your information and doing your reading through a 200-page paper, most traders aren't going to do that. They're not going to read through 2,200-page, annual reports. That's just not what they're going to do. Most traders do it very quickly, very fast, with some logic and information, but not as much as your typical investor would. So back into the video. I'll lose 10, maybe I'll gain 11. Maybe I'll lose 11 and maybe I'll gain 8. Who knows? I'm gaining points. And trading is just very fast, data oriented, but not to the point of which just a long-term scale. It's a very short-term scale and is hugely acceptable to more risk and hugely acceptable to more emotion. When at the end of the day, investing still will most likely eke you out more or at the same amount that just constant trading will. Not to mention the huge tax benefits of investing. If you hold the investment over a year and then collect that, reinvest dividends, qualified dividends, if you follow that with that, investment sort of tax code, you'll have to pay less in taxes than you would with trading. So that eats into your profits a lot, along with commissions and day trading and then all the rules that go along with each of those. Investments for the general person and for most people for wealth building is better to just invest for long term than trade in the short term. So that's kind of the difference in my opinion on trading versus investing. Let me know, are you guys traders? Are you guys investors? I hope you guys are investors if you watch. But yeah, so let me know what you guys do. What do you put your money in? And what do you feel about the markets? What do you feel about trading and investments? What's your guys' opinion on it? So if you guys like this video, make sure you like, comment, and subscribe, and I'll see you guys next time. Peace.